Okay, so I'm just going to share my screen. So I'm sure you all have a copy of the mock paper in front of you, do you?
Yeah.
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 Great. Okay,
Yeah.
so yeah, just to briefly go through the mock paper. So you know you have 8 questions in total.
No, sorry, I don't have one, Angelina. Leslie.
Leslie, did you not? You didn't receive it, did you not?
No, I
Okay.
didn't.
Right. I sent it.
When did you send it?
That was the 12th of December.
Oh,
13th.
I think
Not
I
too-
only got just the 3 sample ones. Just
Oh, the
It's in
trial
the same
balance
email as the
solution.
risk assignment.
Pardon?
It's in the same email as the assignment, right?
Yeah, that's correct.
oh, right, okay.
But not to worry, I'll send it out to you there now.
No, so Angie, I've just made you co-host to enable you to share your screen.
Yeah, thanks a million.
Hi, Angelina, it's Lorian. I don't seem to have received it either.
Okay.
Maybe. Well,
Yeah,
you know
well,
what? I probably did look at it, and
okay.
just with everything.
And particularly coming up to Christmas, it's
yeah.
easy. So
Credit
well,
risk,
you got the
assignment, and
assignment,
mock
okay.
exam.
Yeah.
Yes, sorry,
Perfect.
beg your pardon. I have it here.
No, that's fine. I'm going to
Probably,
share.
yes, I have. Yeah, I've just gone over everything that, I've just that much. That's okay.
No, you might have missed it. That's absolutely no problem at all. Okay, so you know that you have your 8 questions in total. Question 1 and question 2 are your compulsory. So question 1 is based on the first assignment, so your schedule of adjustments, your statement of financial position and your income statement. And then question 2 is in relation to your ratios. So that would be based on assignment 2. And then in terms of the choice questions, I would recommend that you focus on the bad debt provision that was in your assignment 1. And then if you want to do the Z scoring module, that was included in your assignment 2. That one.
Yeah.
Is
That caused me
okay?
an awful lot of problems in my assignment.
Oh, that's okay. Or if you want, actually, sorry. So question 6 or question 7. Yeah.
Perfect.
Okay.
Sorry,
I
Angie,
know.
just repeat that again. Sorry.
Yeah, no problem at all. Okay, so obviously you have question 1, question 2, they're your compulsory. Question 1 is based it reflects assignment 1, which is your schedule of adjustments, your statement of financial position, and your income statement. And then question 2 is reflected in your assignment 2. So that's based on calculating your ratios.
Are the exam questions going to be exactly like that?
But yeah, there's
Okay,
literally
so question
no
1 and
trick.
question 2
Yeah.
is one's the trial balance and balance sheet adjustment,
Yeah,
and question 2 is the ratios.
That's it.
So
exactly.
that's the exam. Perfect.
Yeah, and then you have your 2 choice questions. So for question 1, I'd recommend that you spend it's 40 minutes on that. Okay, so set your time. And as Declan mentioned, if you haven't balanced, don't worry about it. Set it for 40 minutes. If you haven't completed, just move on and then spend a further 20 on your other 3 questions. Is that okay? Yeah.
Okay.
Yeah.
Just so you have an idea. And then for your 2 choice questions, I'd recommend to focus on the bad debt provision, which was in your assignment 1. So it asks you for, you have to calculate and then provide the specific and general provision. And then the other choice question between, it would be question 6, the Z scoring model, or question 7, for you to assign the credit lines for each of the companies. Is that okay? So that's what I would have in my mind. Question 1, 2, question 5 is the bad debt provision, and question 6 and 7. There's no tricks or anything like that. What you've done in your assignments and in the coursework reflects, it's reflected in the exam paper. You could attempt question 8 if you wanted. It's the multiple choice, but that's actually probably the trickiest question, and the questions will be reflected in, you know, the short tests that you did. Okay, so I know a lot of you found them kind of tricky enough.
Yeah.
So yeah. By all means, if you've completed your 4 of the questions and you want to attempt the multiple choice, like I'll score on your best 4 answers, best 4 questions.
Angelina,
Right.
sorry, for the mocks and for the the additional 3 sample trial balances you sent, will you be sending solutions for those?
Oh, absolutely. Yeah. So after
Please,
today,
that would,
oh
yeah,
yeah,
that would help a
absolutely.
lot. Thank you.
Yeah, of course, no problem. So I'm going to work through, like I have the sheet done out here for you. So we'll go through, have the solutions here. And then for the trial balance, I'll certainly send you on the copy of those after. I'll take a note of that there. Is that okay?
Angelina,
So-
sorry, can I just so it's clear in my mind, sorry,
Yes.
it's early on a Saturday morning
is.
after a long week. So obviously question 1, question 2 is compulsory. So we just answer any other 2 from question 3 to question 8.
That's it. Yes.
Perfect. Yeah, that's great.
And
I
then-
thought it was 2 on each page. Sorry, yeah, that's fine.
No, you're fine. And then what I would recommend to focus on for your choice questions was question actually 5, 6, and 7.
But that's 3.
You have a total of, sorry, yeah, you have to answer 2, but if you say, I'm not really fancying the bad debt provision, I do maybe 6 or 7, or if you wanted to do, they would be the 3 that I would focus
yeah, I
on
get you now.
all
Yeah,
together.
Yeah.
Yeah.
You're recommending 3, but we can answer 2 out
Oh,
of those.
well, just to cover yourself, that's
Yeah,
all.
yeah. Okay.
Yeah.
That's
Or if
good
you
to know.
felt you had time to answer those 3, I will score you on your best 2.
Perfect.
of those. Yeah. If
That's
if
great.
that-
Thanks,
that's
Angelina.
clear for everybody, is it?
Angelina, sorry, for question 1 and 2, did you say 40 minutes for question 1 and then around 20 minutes for
The others.
2?
Yeah,
Okay,
because you
perfect.
have a lot really in your question 1, as you can see, you have your
Yeah,
schedule of adjustments and obviously working through your figures and just making sure, yeah, that's what I'd recommend. The 40.
perfect,
If you're
thanks.
finished quicker, perfect, no problem at all.
okay, thanks.
Okay, so do you all get a chance to have a look at the paper, attempt even maybe question 1 or anything?
Yeah.
I know you have a lot going on.
Yeah, yeah.
You did.
No.
Yeah. Sorry, Angelina,
No.
before you get started, can I just clarify something I picked up there? It's 40 minutes for question 1.
Yeah.
40 minutes for question 2,
Oh,
and
sorry.
20 minutes for the other 2. So that's your
Yeah.
2 hours.
Okay.
Oh,
Sorry.
So
Yeah.
just in case
perfect.
you're rushing, because you have a lot of sums to do and you have a lot of calculations to do. So just to be sure, it's 40 minutes for question 1, 40 minutes for question 2, and 20 minutes each then for the smaller questions that get lower marks.
All right, sorry.
Okay. Yeah. No, just better to be clear.
Yeah,
today,
I was,
isn't it?
yeah, okay, that's fine.
Right. I'll keep going. I'll jump out now and jump back in if I hear anything
Sorry,
controversial.
can I just confirm, the formulas will be given in the exam, or like we don't need to know the formulas off?
No.
You don't need
no.
to know the formulas off, and actually it's
Mm.
included in
In-
the last page of the exam. So when you
Yeah,
receive the exam
so,
paper,
yeah.
you'll have the questions, you'll have your Z-score sheets as templates, and the last page
yeah.
then is, what's after happening there? Oh, you
I'm
started
sorry,
sharing.
I didn't
Aye.
realize I hadn't shared my screen. Yeah, so.
Yeah, so
as-
that page
No,
will be
thank
in the
you.
exam paper.
Okay,
So
perfect,
you
thank
have it.
you.
Okay, so I think we'll just get cracking on working through everything and see how we get on. And if you have any questions, then let me know. Okay, so for question 1, just close it here. Okay. Your schedule of adjustments then. I think this would probably be the best way. I think you wanted to me to work through kind of going through everything as opposed to sharing the solutions in front. Wasn't that it?
Yeah.
Yeah, that's great. Thank you.
Thank you.
Yeah, thank you.
Yeah, thanks, perfect.
Perfect. Okay, so if we have a look at our notes, you will see there that it asks for depreciation to be provided on motor vehicles at 20% of cost. Okay, so our motor vehicles at cost are 43. Sorry. trying to keep myself nice and organized and just doing it through Zoom.
And
And
everyone's watching.
exactly. Yeah, yeah. Okay, so I'll just put depreciation motor vehicles. Okay. So actually how I would put it up would be you would have, so depreciation on the motor vehicles is 26,100. Okay. I'll just do debit credit. Now, as I say, if people, sometimes the debit and credits might confuse you. Whatever works best for you, and I can see clearly that's absolutely fine. So for the depreciation on the motor vehicles is the 26,100. It asks you for 20% of cost, so that is going to be an 8,700. So then your overall adjusted balance is going to be 34,800. Is that okay? So that's the depreciation on your motor vehicles. Then it asks for depreciation to be provided on your fixtures and fittings at 10% of cost. So your fixtures and fittings would be your office equipment. Okay. So at cost is 26,400. Okay. 10% of that is your 13,200. And then your overall adjusted balance is 39,600.
Angelina, could I
Yes.
just ask a question there?
You can
Sorry.
indeed, yes.
You know the way it's saying at cost,
Yeah.
would at cost be the 43,500 for the motor
Oh,
vehicles?
sorry, but yeah, so you would calculate 20% of the 43.5. Is that right?
Because the figures you were taking were the
Oh, it's the
cumulative
figures.
depreciation.
Okay. Just bear with me now a second, sorry.
So 10% would have been 2,640.
Oh yeah, 26,400.
But that's the cumulative. That's the cumulative depreciation figure.
Yeah,
I
yeah,
thought
but
it would
maybe
be a
if I
cost figure.
can, sorry, am I on mute? No, maybe if I could jump in there. So say for your office equipment, in your trial balance, you have already depreciated 26,400. That's in your trial balance. So that's how much
Of
the
cost.
depreciation figure is in your trial balance. The 13,200 is what you have to depreciate for this year. So how much of the fixed assets you've used up this year.
Okay,
And
I
the
thought she was putting in the cost figure there. Apologies.
No,
Okay, yeah.
it's 20% of cost.
Of
So
cost,
the cost
sorry.
is in your trial balance, and then you have 20% of that. So that's your depreciation charge for this year, and that's your total cumulative depreciation going forward. So it's how much was there, how much you need to have to add this year, and what your total is going forward. So there, your three figures there. So that's the first figure you get from your trial balance. The adjustments you calculate, and your adjusted balance you get by putting your adjusted balance to what you had, what you need to put in this year, and what it needs to be going forward. So that's that. And then what you're adjusting them by, you have to include that as an expense for the current year and adjust the value of your fixed assets as well. Is that clear?
Yeah, thank you so much. I was thinking that the 2610 was for the cost. So I was like, I don't get the calculation. Apologies.
Yeah, no, that's
Thanks
how much
for
is
clearing
in the trial, and you pick up that figure from the trial balance. It's there already.
And
Yeah.
just to mention something, this is Violet here.
Yeah.
When is it possible to have a split screen so you don't navigate to the other screen each time? Like a split screen.
Is in
on one
this here,
part
is it?
and the
Yeah.
question on the other part.
Okay.
So she's not flipping over to the question. Is that possible?
Yeah, I'll give it a go. If you just want to bear with me 2 seconds and I'll see how I get on. I'll just stop sharing for a second and I'll get myself. I'll just open up another sheet then.
And another question, and another thing, is it possible to let us know if it's subtract, plus, or multiplication or divide that you're doing? Because you keep saying adjust. I don't know if it's a plus or a minus.
Well, it's a
Or
plus because you
times.
have, yeah, you have your 26,100 plus 87, and that would be your total adjusted balance is 34,800. And then you have the office equipment 26,400 plus your 13,200, which is a total of 39,600. Is that okay?
Okay. That's fine.
Perfect. Okay, I'll see if I can do the
Thanks.
split screen for you.
Sorry, I have a question there as well, if you don't mind.
No problem at all. Yeah.
Do the adjustments need to be in the format that you were doing there with the debits and credits? Because the way I would have done would be the motor vehicles at cost times 20%. I get the answer and
That's
label
fine.
that. That's fine. Okay,
Yeah.
perfect.
Like
'Cause-
if you're happy, yeah, exactly. I just put the debits and credits in, but yeah, once I can clearly see that you're able to adjust the balance and what the figure is, that's absolutely no problem. Everybody has, yeah, their own way. Is
That's
that
perfect.
okay?
Thanks.
No problem. Okay. Just hold on. Sorry, I'm just trying to open up a second copy of the mock exam. Thought it was coming up for me there.
I just think maybe, Angelina, do you have the solutions already calculated in the spreadsheet?
I don't have it. I did, but I did that the last time, and I know that people preferred to kind of go through. Yeah, so that's why I said I'd work at it this way and see how we got on, particularly say for this question.
Yeah,
that's okay.
yeah.
Yeah. Okay. Well, do you all have the mock paper in front of you?
Yeah.
You do?
Yes.
Okay.
Yeah.
So if you want to look at the question, and then in this part here, I'll add the solutions. Is that okay?
Yeah.
Right.
Yeah.
Okay. Yeah. Okay. So your total depreciation charge then for your profit and loss is.
You need to share your screen,
Oh, I
Angelina.
do.
It's
Right. Yeah.
yeah.
Thanks. All part of the learning curve, folks. Being on the other side. Thanks a million. Oh. Now, everybody see the screen there?
Not yes.
Yeah.
Great. And it's all clear. It's large enough for you, is it?
Yeah, perfect.
Lovely.
Yeah,
Okay.
Angelina, can I just ask something there?
can.
Sorry.
Yeah.
Just the figure that you have there for the depreciated motor vehicles and the office equipment, the 26,100 and the 26,400.
Yeah.
Should that not be the 43 and the 132? Because your adjusted figures relate to those.
It is the depreciation. So just let me double check now.
Like 20% of the 43,000 is the 8,700.
Yeah, but what you're going to put in here, the depreciation.
10% of 132 is the 13,200.
So it's the 20% of cost, but what you're going to put in your adjustments is the 26,100.
26.
Yeah. Is that okay? And then for the office equipment.
Oh, yes. So basically you're working your percentages out on your at cost figure. I think that's where the confusion was coming there a few minutes ago. And then as you say, you're working your adjusted balance on your, yeah.
Is that okay?
Gotcha.
Is that clearer then?
Yeah.
Perfect. Okay. So then your total depreciation charge for the period is which would be in your profit and loss, your P&L, is the total here, the 8,700, 13,200, so which is a total of 21,900, and then that adjusted balance is going to be 21,900. Is that okay?
Sorry, I'm probably being pedantic now. Is it not fixtures and fittings rather than office equipment?
Well, you could, sorry, yeah, it has. Yeah,
I was looking for, I was like, where's office equipment in the trial balance?
Sorry, that's just, yeah, fixtures and fittings. Okay, so yeah.
Sorry.
No, you're absolutely fine.
I was looking for the office equipment figure. I was like, no, there's no office equipment there.
I see. Okay. And then the next thing we'll work on is the loan interest paid. Okay. So that is, if you see there in the trial balance, it's 15,800. So in the notes, it's payable on the loan for the last quarter, 5,270 to be accrued. So not yet paid. So you're going to, it's 15,800 plus your 5,270, which is your 21070. Okay. So then the loan interest paid will be it's part of the approved account.
Angelina, sorry, can I just ask you a question? Because this, I'm not sure if anyone else had that problem. When I'm looking at the solution that you're sending to anything that we've done so far, where I find it difficult is that your figures are always typed in. There is no formulas there. So when I'm trying to find out where the figures are coming from, I never know, because it's just typed in without calculations being made in the bar.
I know
exactly.
I know for
I also find that
solutions,
difficult as well.
I did
yes,
put, yeah, I would put, like, so for yourself, what I would be doing is the motor vehicles at cost is going to be, say, 43,500. So 43 multiplied by, I know I had that the last time, certainly when we were going through assignment 1. So you'd be multiplying it by 20%. That will give you your balance here. So then if that, I know I did definitely put in the calculations for you. So is it to literally have every single calculation for every single line?
I think it makes it easier for us to track back if we don't understand where a figure comes from. If we have
when you were doing it now, it's
with
fine
no
because we are following
Okay.
you.
Sorry, could we just have what? Could I have one voice at a time, if that's okay, please? Thanks.
Sorry, I was just going to say that when we are doing it now and you just put in the figures, it's kind of obvious because we are talking about it. But when we go back on something that you sent and trying to figure out ourselves, it's kind of then tricky because you just see the numbers without I know what you're saying, because I did see a few, but majority of the result of the solutions wouldn't have it. Because I feel I always spend more time trying to figure out where the figures came from rather than studying okay,
well then for the trial,
just for the tip, so it's easier for us.
Yeah, okay.
Thank you.
Yeah.
And that's also for me too.
Yeah, I'm just looking here, Angelina, as well. I have the solutions to the mock exam here on my desk at the moment, and I've just checked that the figures are done in formula perspective. Are you with me? So what I've done is, that I can give this to you and to share with everybody. Is that okay?
Perfect. Yeah.
So rather than getting hung up, but it is important that people understand this,
yes.
Because once you have your schedule adjustments, then literally it's only a matter of putting the figures in the correct place, which should be an easy job. But I'll send this to you now just to be sure. So have you shared the solutions to the mock paper yet? No.
Have I? No.
Yeah.
No, you haven't.
Well, look, I'll send this to you, and you can share it with the group after the session. Is that okay?
Yeah.
And it does have the formulas in it, so you can see where the figures are coming from. But I think
perfect.
it's better, guys, to understand it from an overall perspective rather than getting bogged down in the details. And I think, you know, anybody who finds it difficult or this subject difficult, it tends to be because they overthink it. So literally it's just a matter of adjusting our accounts to give a true picture of what happened in the previous year. So that's what we're trying to do. Sorry, I'll let you keep going.
No, that's fine. So I'll just share my screen again. So I'll just continue on. I'm conscious obviously of time as well. But so when you're looking at your notes, do you know what figures you're looking at to calculate for your schedule of adjustments?
Yeah.
You do? Okay.
Yeah.
Yes.
Sometimes trying to understand it. When you see the solution, right, that's half the problem, but then you're trying to understand, well, why is it like that? So
okay,
I tend to get bogged down in the details, which is my downfall.
No, that's absolutely fine. I can understand where you're coming from. Okay, so then in terms of your accruals account, which is your figure here, the 5270, that's what you're going to have in your statement of financial position. So that's the total for the accruals account. And then for has a new insurance policy was paid for 12 months in advance at a cost of 8,000. So sorry, your rent rates and insurance. Okay. Sorry now. Just yeah, okay. So your rent rates and insurance. Not sure. Sorry, just bear with me one moment, folks, if that's okay. Yeah, okay. Okay, yeah, so for your rent rates and insurance, your figure in the trial balance is 21.5. It's saying that it was paid in advance in June at a total cost of 8,000. So your adjusted balance
was in July.
Sorry?
It was in July.
30th of June?
What was it? It's
at the end.
It was paid for the month for 12 months in advance on the 1st of July 2020. This is what's on my notes. Insurance includes a new policy costing 8,000 per annum and which was paid for 12 months in advance on the 1st of July.
Perfect. Okay, thanks a million. So your adjusted balance then, or the balance is 4,000 euro. So if it was prepaid, it would be the 21.5 less the 4,000, which is 17.5. Okay. Actually, I'm sorry, I didn't put in the total.
Sorry, Angelina, you got 4,000 because you took 5 months or 6 months?
For 6 months.
All right, yeah. I did for 5 months and I got 3,300 something.
Okay, yeah, no, for 6 months. Is that okay? So then your total adjusted balance for the rent rates and insurance is 17.5. Your prepayment account then, your total is 4,000 because it's your figure here. Okay, and then that's prepayments. Your cumulative provision for bad debts. Okay. So it says provision for bad debts is to be adjusted to 1.5% of debtors. Okay. So 1.5% of your debtors. is 5.5. So you're looking at your figures. Your debtors here. Sorry, I know probably flicking back and forth doesn't help. So to be adjusted to 1627 and then 727. And then your total bad debt provision charge is the 1627, which is this figure here. And then your totals. Sorry, just hit pause there on my screen. Okay, can you see the screen? I think it seems to have paused on me. Sorry, no.
Yeah.
You can see it, can you?
I can see the screen, yeah.
Yeah, sorry, I'll just go back in again. Okay. Okay, perfect. Okay, so then your totals should balance. So if you add all of these together, you'll get 32,797. And by adding all of these figures, you'll get the same 32,797. Okay. So for any of those that did attempt to do that, were you on the right path, or were they the figures that you got?
Yes.
Okay. Yeah. Very good. So just for in the exam, you obviously don't need to do your adjusted trial balance, but in the solutions, I'll include the adjusted trial balance for you. Is that okay? Just for your own revision. I'll just put it out there. Right. Okay. So then we will go to our income statement or the profit and loss. So just make sure that you put your heading at the top. So Jack Jones Limited, just for kind of quick purposes, I won't go. Okay. So the format never changes. So we'll have our sales, which is 2,375,600 less cost of sales. So you have your opening stock, which is 158,305 plus your purchases, which is 1651042. You include your closing stock here, which was in the notes for 150,500. So is 1658847. And this leaves you with your gross profit. So subtracting those two, subtract this from this is 716,573. Okay, is that clear so far?
Yeah.
Okay, great. So then we're going to move on to your operating costs. Okay. So you have your wages. Okay. So, and salaries. 356,340. Your admin expenses. 78560. Your distribution and trans costs, Your 49.50. Your insurance, which is your adjusted figure here, okay? That's 17.5. Your depreciation charge. Sorry, I'm typing quickly and there's a few little misspellings, but sure, we won't be worried about that, just to be happy with our figures. So your total depreciation charge, and I have the little note that it goes in the P&L, is profit and loss, or your income statement, is 21,900. And then the increase in the bad debt is 16270. So that's your total operation costs, okay? Which is 525,477. And then will be your net profit before your interest and tax, what we call your operating profit. So taking one from the other. Okay. So that's 191,276. Less your interest paid. Okay. So your interest paid was 21,070. And that gives you net profit before tax, which is 170,206. Okay. We all happy so far?
Yep.
Yeah.
Yeah, okay. So does that make sense? So in your operating costs, you're included your adjusted balances.
Yeah.
And then I know a few people did
Yeah.
have queries. They were wondering how to treat the interest. So the interest and tax is always taken after your operating profit. So you won't include it here.
So if there was so you have an interest paid, so that's, you deduct that from the operating profit. And then if there was a tax paid as well, would you add another line as well?
Yeah, but we wouldn't, it's just the interest paid, but it would be, any interest or tax. So net profit before interest and tax will give you your operating profit, less any interest paid, or if there was tax, so that'll give you the balance. Is that okay then?
Yeah.
Perfect. So that's literally how it is so far. Like it's never changed from when you were doing your assignments or the trial balance. It's just keep practicing so you understand. And do you understand the figures as well?
Yeah.
Okay, great. So then we'll move on to the statement of financial position. So it'll be Jack Jones. So just also remember just the little things to put in your heading as well, okay? I'll just put balance sheet for myself. Okay, perfect. So we're going to have our first heading, which will be our fixed assets. Okay. Just make sure. Okay. So our fixed assets are 430,000. And within that, you'll have your buildings. Oh, sorry, just bring that down. Okay. So you have your motor vehicles. Okay. At cost, which was your 43.5. less your depreciation, which was 34,800. Okay. There's your balance here. So the 34,800 from the 43.5 will give you the 8,700. And then you have your fixtures, which is at cost 132,000. Less your depreciation. Here, 39600. So again, in your schedule of adjustments, it's the adjusted balance there. So taking 132 or 39.6 from the 132 will give you your 92,400. So that's your total fixed assets, is adding these three together, and that'll give you 531,100. Okay. Then we move down to our current assets. So that will include our stock, which is 150,500. Your debtors, 468.
Sorry, Angelina, where are you getting the stock figure from?
It's your, yeah, stock is the 150,500, your closing stock figure.
Closing stock. Perfect. Yeah, thanks.
Okay. Then your debtors, 46800. Okay. And your bank. Okay. So your prepayments account that you have in your adjustments relating to your insurance is 4,000. Okay. So the total for your current assets then is 630,359. So then less your current liabilities. So you have your creditors, which are 330,208. Your mortgage. Now it's just for 1 year because it's within your current liabilities. And that is 30,100. Your accruals account, 5270. And then any VAT payable, which is under the VAT control account in the trial balance, 84,075. So the total of your current liabilities is 449,653. So subtracting your liabilities from your assets, you will get 180,706. Okay. And that is your net current assets. And then we look at our long-term liability, which is the remainder of the mortgage. So it's 9 years, which is 270,900. Okay. And that will give you your net total assets, your net worth, which is 440,906. There you go. And then financed by your capital. So that's your, I'll just put that in bold for you there. Your capital, which is 2,000. Retained profits, which is 268,700. And then your net profit for this period, 170,206, which was your figure here. And adding those three together, you will get your net worth again of 440,906. So you've balanced there. Is that okay?
Yeah.
Angelina,
sorry, come.
sorry, how likely is it that we get the VAT element on the exam? Do you remember on some trial balances there was like net debtors figure that we had to calculate the VAT, and then I was always a bit confused as to which figure then you put in the.
Just to clarify, yeah, VAT won't be included as far as I'm aware. I'll just double check it with Declan, but yeah. Is that okay?
Right,
you don't need to worry about calculating any debt.
It's not even the calculating, but then I was always confused where I put, like, which figure do I put in the. Yeah, thank you.
Angelina, sorry, can you go back to, I'm fine with where you got to the net current assets, then the long-term liabilities with the mortgage.
Yeah, I know some people, that's how I would do it. So your net current assets is obviously your current liabilities from your current assets. And
yeah,
then,
I'm fine. I know where you got your net current assets.
Okay.
I'm not following where you got the 440,906. Did you add the mortgage to the net current assets?
Yeah, I'll double check my calculator.
Or is it, no, you added it, it's the fixed assets plus the net current assets minus the mortgage.
Yeah.
Perfect. I'm okay. I had a blonde moment there, or a dark moment there.
Is that okay?
Yeah, I'm with
I know
carry on.
when there's so many figures, and I know actually it was suggested as you're going through the trial balance to tick off all the figures that you've included. I think it was yourself that actually said that, Jerry, wasn't it? Yeah.
No, I'm grand now. Thank you, Angelina.
Okay, so are you happy with that? So that's question one in the bag. Okay.
Cool. Yep.
Angelina, any chance we're going to be throwing a curveball in the exam when the net profit is a minus figure?
Okay, your net profit. Yeah.
From your income statement.
Yeah. So the net profit would be a minus figure here.
Yeah, just wondering. Any chance we could be throwing a curveball in the exam that it could be that?
No, oh no, absolutely not. I mean, no. You're just trying to make life tougher for yourself. I think it's.
No, I'm just wondering in case to get a minus figure in the exam.
I know,
I know it's wrong.
But if you get a minus figure, yeah, you just subtract instead of add it.
No, I know. I'm just wondering, just in case there's a bit of a panic in the exam if it is a minus instead of a plus.
It could easily happen. It could easily that you're whatever way you're doing your calculations, but yeah, no, we certainly wouldn't be throwing any curveballs that you. Yeah,
you're gonna do it now.
No, oh no, absolutely not. Okay, so we happy with question one then?
Yeah. Okay. Maybe Angelina, if I just jump in here for 2 minutes,
please, Declan. Yeah.
Just in terms of so guys, when you have put in all the figures and you get your two numbers, like Angelina has the 449.06. Now, if either balance, just put the figures in, and if they're a mile out, it doesn't matter. Just add up the numbers, and obviously these two figures should be the same. We all know that. If they are not the same, do not panic. So if it's within if your 40 minutes is up, move on to the next question. Leave them unbalanced, it's fine. If you have a few minutes to go back, can I give you 3 hints as to what to do? Okay, so hint number 1, if they don't balance, number 1 is subtract the top figure from the bottom figure, right? And you find out what your difference is. And then look through your trial balance and adjustments again to see if you left a figure out. Is that okay? So just subtract the two numbers, find your difference, and then look through your trial balance and your adjustments to see, did you leave a number out? If that works, grand, you're now balanced. If it doesn't work, then when you get the difference between your two figures here, divide the difference by 2 and then go looking for that figure. And why you're looking for that figure is if you divide the figure by 2, it means you added something instead of subtracting it. Are you with me? So you just do that. And then the other thing, which I'm very prone to do, and actually if you double check Angelina's figures, I think you did it as well. If the difference between the two numbers is an exact multiple of 9, so say for example, your difference is 900, right? If your difference is, so your number divides by 9, so the difference is 180. If your difference is 180, what you did was the number was 240 and you typed in 420. Do you know what I mean? You transpose the numbers. So if you transpose the numbers, the difference is always divisible by 9. All right. So if you just add up the numbers divided by 9, yeah, it comes to a whole number. Now I've put in a 720 instead of a 270, and that's easily done as well. And the other thing, just that you put your mind at rest, well, you will get marks for every correct number you put in the correct place. Are you with me? So if the balance sheet doesn't balance, you might have dropped 2 marks or whatever, you know, boo-hoo. You know, you're not here to get 100%. All you need is 40% in the exam to get over the line. So come on, you know, just get the numbers in the right order. Get as many of them right as you can. You will get marks for everything that you get right. And you know, so that's that. So look, if it balances, I know you'd like to relax if it all balances up, and I hope it does to boost your confidence. If it doesn't, no need to worry. So find the difference, see if you can find the number, divide it by 2, see if you added something that you should have subtracted. And then if not, then divide it by 9, see if you transpose the number. And if that all fails, and again, if you have the time, then just go down line by line, check your trial balance and check your P&L and balance sheet. But look, there's no panic, you know, so I just want to put your minds at rest of that. So that's just something that I hope you find useful on a ongoing work basis. So
I wish I knew him 3 years ago.
What?
I wish I knew him 3 years ago.
You see, every day is a learning day. Anyway, let's keep going, because I'm conscious we're on till whatever time we're on till 11:30. So we've only 20 minutes now to get through the rest of the paper. But guys, if you get question 1 right, you've almost you have 50 out of 140. You've almost passed the exam with that alone. All right. So question 2 maybe is worth concentrating on, and then question 3, you've also given them where to go studying for that, you know, for the 2 smaller questions. So we're flying now. If you can get question 2 as well, you're laughing. Back to you, Angelina. Go ahead.
Oh, thank you. Okay, just make sure. So I'll share my screen again. So just make sure I have everything in order now. Okay, so I actually have the solutions, so I thought it might be just easier to have them up in front of us.
Rather than doing sums.
Yeah, absolutely. I just thought for the benefit of question 1, I know people did want it the last time, but look, not to worry, we'll see what works. Okay, so in terms of the question itself, so it says you're required to calculate any 6 ratios of choice for each of the 3 years. Okay, so what I would recommend is that you it says any 6 oh yeah, and these should be included from, 1 ratio should be included from, you know, the profitability, liquidity ratios, management officio ratios. So those 3 groups. Okay, so I have all the calculations there in terms of what the percentages are for each of the 3 years. Okay, so the first one we'd look at is the profitability ratio. Okay, did anybody attempt this question at all or have a look?
No.
Not this.
No. Okay.
No, but I was curious to see which best 6 would be to pick from, like, 'cause
Oh,
there's
yeah.
obviously a lot of ratios.
There is a lot,
Kind of,
yes,
I
there's a
wanted
lot
to
of
see
choice.
guidance. Yeah.
Yeah, that's absolutely fine. Okay, so under the profitability ratios, you have your gross margin. Okay, so the calculations are done. I would select the gross. Okay, your operating profit. And then we can see, I just added in the notes here, the gross margin has increased year on year, which we'd say is a good achievement, particularly as there's no less volume in sales. And then we can see that the operating profit has also improved significantly, particularly in the last year. So we'd say that's a good control over the running of costs. And also that staff numbers may be reduced without any negative impact on sales. So for the profitability ratios, they would be the two that I would choose. And you can see the trend there for the first one. Is that okay?
Yeah.
Okay. Then for your liquidity ratio, pick your current ratio. Okay. And again, we can see that the ratio has improved over the 3-year period, and it's obviously at the highest in the latest year. We could say that it's in a good position to finance further expansion in sales, and also is a good indication that the company is financially healthy and it has all their debts covered. Okay, so from the liquidity group, select your current ratio. And I would choose then your liquid ratio or the acid test. So again, we can see in the 3 years, it has improved despite significant investment in fixed assets, which will have an impact on cash flow and funds. We'd say this could be primarily due to major improvement in creditors. So overall, the liquidity does remain strong, and we'd say that the company would be a low risk. Okay. And then finally, for your third, you have your management efficiency ratios. So the 3 that I'd choose would be your stock turnover, your debtor collection period, and your creditor payment period. Okay. So we can see that each of the ratios show significant improvements in the latest year. They did go out to a high level in the second, but in the latest year, there is a negative trend, which has been arrested, indicating that there's a good effort by management to bring the ratios in line with acceptable levels. And creditors, once again, are shown significant improvement. Okay, your collection period there, or payment period, sorry. The cash operating cycle has increased over the 3-year period. We could say that that's as a result, or the biggest improvement in the creditor payment period. And this will give the company much better negotiation with trade suppliers and other creditors who'd want to see continued improvement. And it indicates a very good cash flow management. And also the improvement in stock turnover. As you can see there, figures have reduced, is a good sign that stock is being used more efficiently. Is that okay? So that's the type of, they're the ratios that I would look at within each of the groups. So your gross margin, operating profit, current ratio, liquid ratio, asset test, and then within your management efficiency ratios. And use the language that's been used as well, you know, if that's okay.
I was just about to ask a question, Angelina, in terms of the ratios, the calculations, obviously that's the most important part as well. How is the score weighted in terms of our explanation? I mean, do we have to go into like?
No, that's actually now for, if you can say that the current ratio has improved each year, have your calculations right, and say that you have an idea that they're fine. No, that you say that they're financially healthy and you think that their debts are covered. 2 sentences. I would be happy.
Yeah.
That shows an indication for the purpose of this the mock exam. Obviously, for your just to have a bit more information to go into depth, but you won't need to do that in the exam.
Okay.
Is that okay?
Yeah.
And
perfect,
then I could say that all the ratios in the latest year indicate that the company can afford to take on further credit. And we consider that the company is a low risk for this amount. And that's it for question 2.
When you consider them as the low risk and assign them to 50k, would you be looking at Z scores and base? Yeah, would you be looking at more detail in terms of the Z scores and industry charts and stuff?
Well, for the purpose of the exam, it would be your ratios.
Right.
Yeah.
So I know in terms of when you're one of the questions that says like how much credit limit would you assign to the customer, you're obviously looking at the averages and you've already calculated if they're low, medium or high risk, and based on that you calculate a percentage. So I'm just wondering if
that's for question 7. Yeah.
Okay.
No, that's fine. Yeah, for question 7, you're the credit manager. Yeah, but for question 2, it's based on your ratios.
Right. Okay.
Overall, whether you feel that they will be a high risk or low risk. Is that okay?
Yeah, perfect.
So that's pretty much, that's question 2. So
And
just, yeah,
sorry, Angelina. You know, for the question 2, how you have done, say, the 15 ratios there and shown,
No,
it's just the 6 that we decide to do.
Yeah. So, I mean, like, it depends. Like, I mean, some people may want to choose other ratios. It's up to you. Once you can show, it says you're required to calculate any 6 ratios of your choice for each of the 3 years. Yeah. So this is just a guideline. I think these will be the main ones that you hone in on.
Yeah. Okay, cool.
All right. Okay.
Angelina, you said or yourself or Declan said at the start, all the ratios are included in the
calculation of the ratios.
The formula as such is included in the exam, is it?
Yeah. Yeah. Oh, absolutely. Yeah, it is. Yeah. I'll just show. It is. Sorry, maybe it's not here. No, it definitely is. Yeah. As I said, there's no hidden tricks, no nothing. It's an open book as well. So, like, if you had your ratios in front of you, that's absolutely fine as well.
Good. And just in regards to that, sorry, I know you're dealing with question 2 now, but in regards to the question 7 part, when it's asking you to pick between the limit you'd extend to each, or the credit line you'd extend, can you just go through that briefly? Like, how do you best calculate which company is deemed to get the most? Like, if you're saying a credit limit of 10 grand, how do you decide that you'd give 10 to one company and 8 to another company, for example?
I think you'd base it on your like a credit line percentage if you wanted to look at it that way. I'll just double check what I have here. So you can still see the screen, can't you? Yeah. So I'll pop over to question 7 there. Okay. So you'll see I have the scoring done out. It's assign an appropriate credit line to each and state what your recommendation is based on. So I've done it in terms of a calculation percentage here. Okay. So say for the highest risk company, you'd give them 5%. For the medium, 15%. And then for the lowest risk, 25%. I'll double check now.
So can I ask what possibly sounds like a stupid question? Is that 25% of what that company would be deeming to ask, or 25% of what you would offer as a max credit to a customer?
What we would offer, yes, exactly.
Oh, okay, sorry.
No, don't apologize. Is that okay? That answers your question.
Yeah, it does. Sorry, it was just, even in the assignment, it just completely threw me off. I wasn't sure. I see we have done it now in regards to calculating it for the main, and you were saying, obviously, like, I just wasn't sure then, are you basing it off 25% of what they're asking for, or 25% of what you deem to be the max credit for a customer?
Yeah, I can double check it just with Declan.
Sorry, we can take this percentage from credit assets minus credit liabilities formula, yeah? The credit line.
Say that to me again.
The credit, yeah, the credit line would be like, if we take a percentage from the current assets minus the current liabilities of the company, yeah?
Yeah, I'll just double check that.
Another question, like if the company is at high risk, yeah, can we can't, for example, let's say I answer not give this company the credit because it's at high risk, yeah?
That's absolutely, yeah, if you
Yeah.
decide that they're too high of a risk and you
Yeah.
decide to not give them, that's if you feel, yeah, that's fine.
Thank you, Angelina, yeah.
Okay.
Sorry,
So,
can I?
sorry, go ahead.
No, sorry, I was just going to ask a potential really silly question. The credit line percentage of the 5, 15, and 25, like where did you get those percentages from?
Yeah, I was
sorry, I know it's probably so obvious, but
no, it's not. It's not, Sarka. And again, it's literally just a guideline that from years of experience that we have developed. And if you want to change them to 3, 15, and 74, that's you know. There's nothing really written in stone in this. So I would, and if you want to put a line in the exam to say that, you know, the note says to give a maximum of 5 for high risk, 15 for medium risk, 25 for low risk. But you know what? Our business is a very high profit margin business, and I'm happy to give them 50%. And that's valid as well.
Okay, yeah, I just wasn't sure.
It's just a methodology that at least you have a consistent way that you don't have to make decisions for every single new account that comes across your desk, that we do have a formula there that will handle hopefully 90% of the applications that come across the desk. And then the 10% exceptions, then we have to manage them and make as good a stab at them as we possibly can.
Okay, I wasn't sure if that was like an actual, say, ratio that you would follow to get the credit line percentage, and if I'd missed it some way.
No, it's just a guideline, and
perfect.
It's a really good guideline. It worked for me all my credit management career anyway.
Okay, thanks.
And sorry, just to bring it back before we leave question 7 there, and I know putting in the 0, 1, 2, 3, where 0 is the best and 3 is the worst. Guys, simple rule of thumb, if you're looking at it, for things that we like, the higher the number, the better it is. So we like profit, we like current ratios, we like, so things that we like, the higher the number, the better. Things that we don't like, things like costs and DSOs and stock turnover, then the lower the number, the better it is. So just that in terms of saying what's best and what's worst. So the things that we like, so profit we like, so the higher the number, the better. Sales per employee, the higher the better. Creditor payment period. Now, we would differ to accountants. Accountants would say the higher the better. So if you're talking to an accountant and they confuse you, yes, maybe from an accounting perspective, the higher the better, because we get to hang on to money belonging to the creditors, whereas we are credit controllers and we like people who pay their bills. So on that basis, the lower that figure is, the better we like it. So just when you are scoring it, just have that in the back of your mind, and that makes the 0, 1, 2, and 3 easy. Then we just add them up. And whatever the lowest number is the lowest risk, and the highest number is the highest risk. All right.
Yeah.
No pressure, Angelina. 5 minutes now to.
Grant.
Yeah.
Okay. So question 7 is, as the model you score, you just say whether they are high, low risk, and then in terms of what credit you'd recommend. So that's another of your choice question 7. Okay.
Yeah.
So we'll go to question 5, which is the bad debt provision, which was in your assignment as well. So again, you'll have the chart laid out like that. It's going to ask you to prepare a schedule of recoverable and unrecoverable debt based on probability. Now, VAT is included here. For the purpose of the exam, VAT won't be included, so you don't need to be worrying about anything, okay? So then as you go through the table, you have your recoverable percentages. So it's literally doing the calculation of the figures. So 100%, 95%, 90, 75, and 10. And that'll give your figures of recoverable there. Okay. your unrecoverable, then you will subtract your recoverable, if that's clear, okay? And then if you want to go into a bit more detail, you can put your net unrecoverable, but all we're looking for here is the recoverable and unrecoverable, exactly like that. Then you say what your specific, is that okay, Declan?
Yeah.
Okay. In terms of what your specific provision would be, just double check that I'm happy with that. So in terms of including the VAT here, you'd have the 10,485, and then your general provision, which is your net unrecoverable, less your specific provision, if I'm right in that, and that will give you your general. So you have your specific and your general there. And then for question C, briefly explain your recommendations. So generally you would know 150 plus days over, unlikely to be recovered, and the balance of the unrecoverable debt is usually based on probabilities.
Yeah, and I suppose two other things there, Angelina. The 100, 95, 80, 75, 10, that's only a recommendation. In the real life, you just look back over your history from a company to see if that, you know, and you'll find it is very consistent year on year on year. So again, those percentages in the real world can be altered. And the other advice I would give you in the real world is make sure that your provisions are as high as you can possibly get away with. If there is a bad debt, the knives come out and the fingers are pointing for somebody to blame. If you have provisions in the account for bad debts, the bad debt gets written off against the provision and it has no effect on the profit, so nobody dies. If you're under provided and the bad debt hits the profit, that's when people in senior management positions get very upset. So that's just a word of advice from provisions. I would always manage the bad debt provisions, even though you might think the accountants do that. That is, I've always described the bad debt provisions as the padding on my posterior. Would I get a kick if there's a bad debt? Yes. The more padding I have, the less it will hurt. So just get as much as you can, and keep an eye on your bad debt provisions, because sometimes accountants can pinch that if they're under pressure to show a profit figure for a period or a quarter, and if they do, they're leaving you exposed. So that's just a real world lesson for there. Okay,
Declan,
yeah.
is there any negative impact for over providing for accounts?
Yes. Well, the negative impact is that because you're familiar with the P&L account, your provisions come off your profits. So the higher your provision, the lower your profits. Now, also the lower your tax bill, which can be good as well, because you pay tax on your profits. So, you know, we want to have as much provisions in there as you possibly can. We can write our specific provisions off against our tax, not our general provisions. That's a new tax rule that came in a few years ago. So yeah, just I would, you know, provide for as much as I can possibly get away with. And yeah.
No, sorry, go ahead. Sorry.
I was going to say with new accounts, if I was taking on a very high risk new account, I would probably provide 100% of the profit for the first 3 months. So the provision against that specific customer exceeds the exposure balance at any one time, which means that once I cover the exposure, then I can trade with them risk-free for forever. And if they last 6, 8, 10 months, we're still quids in, we're still making money on them. So I would be fairly liberal when it comes to giving credit.
Just a quick question. I could be well off in saying this. For the part that we're going for our schedule of adjustments, that we're increasing our provision for a bad debt due to a percentage of our debtors or something. Could it never be a case that we could decrease the bad debt provision and take that as where would that go then? Because would that
profit.
That fit back into an asset then, would it? A decrease in a provision, the current asset?
Yeah, but the asset it would increase is the debtors, and the the expense it would reduce is in your expenses in terms of your bad debt provision and your P&L account. So if the company is struggling for profit, and they want to show the shareholders that we are profitable, that's when they can look at the bad debt provision, say, hold on, we have 180,000 in a bad debt provision. If we drop that to 80, we'll add another 80 to our profit, and our shareholders will be happy. That does happen, you know, on a regular basis in the world of accountants. So that's why I'm advising you to keep an eye on it and make sure that anything that happens to the bad debt provision, you know, you have the veto on it if required.
Perfect.
Yeah.
Thank you. Yeah, perfect. Thanks.
Okay.
All right.
So
11:32.
yeah. I would just go to hone in on question 6, which is your model scoring. So literally it is based on the key performance indicators. Sorry, now to share screen. Okay, so you're provided with the key performance indicators. Then you're provided with the model part here. I don't know where it's gone now. Great. Sorry. Okay, so it just asks you to score each company. Okay. Possible range, and you have the different types of risks that they are based on the scores that you give them for the key performance indicators. And then how you can improve their score. So how you'd make, let's have a look at it. Identify the company that's highest risk and state which ratio, if improved, would result in a better score in the shortest time. So for the purpose of this, you could look at maybe reducing your debtor collection period, the stock days, and then in terms of the liquidity ratio, which show the overall how it's performing, how it could be increased. And that's question 6.
Yeah.
Is that okay? Is there anything that you wanted to add to that, Declan, that I might be missing?
The only thing, just before we wrap up, like you have given them a clue for question 5, 6, and 7 in terms of the Z-score model, the scoring model, and that sort of stuff. Question 3 and 4, just in case you like them, I would, if I was doing the exam, I would be looking at cash flow schedules, if you like that sort of thing, and the stock, the FIFO and LIFO, if you like that sort of thing. If you don't, that's fine. Just ignore them completely and think, okay, I only have 2 questions to do. I am going to do this question and that question. And then that's what you practice on in the next week. And maybe I shouldn't tell you this, but I will. What I would do, guys, is if you have 30 seconds left over at the end of the exam, attempt question 8. It's multiple choice. You have 3 choices. What's the worst thing you can get? You can get a third of them right if you pick all A's. And rather than sort of poring over it, just in case you have a disaster, it might be the 1 mark you need to bring you up a grade. So I would just maybe just have a go at it without spending an inordinate amount of time on it. So just as a banker, because as Angelina has already said, you know, if you answer 3 questions, she will correct all 3 and give you the 2 highest marks, and you just might be lucky. It's all right. So that is that. Okay, look, I'm very happy with that. I hope everybody else is. What I'll do is I'll stop the recording of this session now, just to let anybody ask any questions. Where's it gone now? Stop recording.